Success is achieved and maintained by those who try and keep trying. W. Clement Stone. Are you trying? Do you keep trying? That's what it takes here in the marketplace. Each and every day, 10 to 15 minutes is all we ask. Big down day in the market. S&P 500 down 5.76%. NASDAQ 100 down 4.91%. You guys remember? Do you remember all those months ago when the market crashed? And remember when it was making the vertical recovery we were told about? Everything was going back to normal. I didn't just come up with this diagram that I'm showing the folks who are watching via video. Those of you listening to our podcast, tell you what I'm looking at. It is a timeline and a valuation line. Valuation going up, timeline going sideways as time goes. It shows you what market buildups and what market crashes are all about. It shows you what we have been through over the last few years. Media attention, enthusiasm, greed, delusion, and the new paradigm. Remember that? Things would go up forever. Then we had the coronavirus, an exogenous event no one expected, no one that I know expected. And what happened? We went into denial. Couldn't believe it. Markets are crashing now. We talked about it. We saw it on our charts. We watched it. We watched it bottom out and rotate over. I kept telling, I've recorded trainings. You guys, many of you have taken them. You've seen the comments. Oh, you don't know what you're talking about. This won't happen. This is a new paradigm. It's not a new paradigm. It was what they called the return to normal. The bull trap, I said it will be anywhere from 1/3 to 3/4 of the recovery. And then all of a sudden, something will happen. And all of a sudden, the return to normal goes out the window. Fear takes over. Then capitulation later. Then despair. Then the bottom. That may be on the way at this time. Maybe this is just a down day, a very down day. The first down day we've seen like this in quite a while since the market crash and the quote, return to normal. You have been asking me throughout the day, is this the bull trap that I've been talking about being sprung? Now, I didn't come up with this. If you look back at all the markets, whether you go back to the dot-com bubble, you go back to the Great Depression, you just go back to any of these bubbles that we have had, housing bubble, you name it, this is what you see. You will see this bull trap. Now, there are other times when all the way down things will drop and then they'll level, they'll go up, then they'll drop again. But the real bull trap, after the initial down move, this is where everyone plunges in the water. You're in denial. You all of a sudden are able to come above water, catch your breath, and you don't realize you're still drowning or you're about to get sucked down again. And that may be what's happening now. This is just the first day. We're not making the call that has occurred yet. But the warning signs are out, and now all of a sudden, people are listening again. We shall see, my friends. Let's jump into these charts. The S&P 500, like I said, down 5.76%. That's spiking up, price percent oscillator. Remember why I said, how are things so good in the summertime trading zone, which is it's the crappiest time of year to trade? Well, we just saw that price percent oscillator bank. I mean, it just lost all of its vertical, didn't it? Almost went flat. Derivative oscillator also pegged down. We now have a red open box spinning top with a long wick on the top showing you how much has been shaved off. Now, that's where we are on the weekly. It's not negative yet. It's just a down day, but a big down day. Look at that 2-day chart. The last time you saw a down red candle on the S&P was on the 15th of May. And then things shot up from there. That's a solid red. Look at that solid red candle, the way it banked over. And this is the first day of the latest one and hammered down through the 2-day trend line. A nice trend line. Boom. We had a bit of a warning. We talked about this, the red open box candle, hoping it was just going to digest some gains and keep moving up. It didn't, did it? Warning bells are going off. Now, we haven't had the crossover on the 2-day chart yet, but maybe headed that way. We'll see. We did see even the weekly trend line pierced by that strong down move. Now we go to the 4-hour chart. That's where you see the hemorrhaging. Look at that. In the morning, pierced the 4-day trend line and the 2-day trend line. How many of you pulled your practice trade after that morning disaster? Did you do it? Are you still holding on? What are you waiting for? What are you holding on for? Are you waiting for the 2-day to cross over going down? Did you already get rid of part of your trade and are holding? That's okay. That's fine. That's why I say over and over again. In fact, the training that I have at the in the show notes for all of the subscribers, you become a subscriber for free, is a really good one. It's what lessons did we learn from the corona crash and recovery up to this point? There are a number of them. One of the lessons is you will learn more during these rough times in a month than you would learn in years of other markets. So embrace this, learn from this, practice trade this. Again, pay close attention. Valuable lessons are learned. Now, that's where we are on the S&P 500. We're going to go back to the weekly chart and look at the hemorrhaging in the Qs. The NASDAQ 100 down almost 5%, 4.91. Now, where do you see that on the Qs? The Qs was going up a lot more. We can see that it's not gone red open box at this point, still green, but look at that long wick on the top. That tells you a lot has been shaved off, and price percent oscillator lost a lot of its angle up. Derivative oscillator, these are still positive, but they've lost energy. And look at that 2-day chart. Red spinning top, indecision, tending down. We can see where the down movement pierced the 2-day trend line, a decent trend line. Price percent oscillator still positive, so it hadn't crossed over going down yet, but derivative oscillator is lost a lot of energy, and the price percent oscillator is heading down, getting closer to a potential crossing over. And look what happened in the afternoon. Had that 4-hour chart crossover. Again, didn't hit the depths of the S&P and pierce the weekly trend line, but did pierce the 2-day trend line sitting above it. So again, those are warnings. Now, what's the market going to look like on Friday? Well, we shall see. Again, market's been very, very good to us over the last few weeks. And those of you who've captured so much of that up movement, of course, you can sure be happy about that. And again, as you start your decision process on when do you pull your practice trade, if you didn't do so at noon today, or you pulled part of it and cashed out, or you already cashed out a week ago, 2 weeks ago, 3 weeks ago, hell, you've had a long time to run this up. Again, those of us who have been through this before are happy to take what we can get when we get it. And of course, be very careful to always be liquid. When people ask me about liquidity, in fact, that was your training yesterday. How many of you guys took that? That training on liquidity yesterday is all about the power of liquidity. It gives you the ability to pull bad trades or good trades that have gone dangerous very, very quickly. And the difference between the bid and the ask tells you about liquidity. Take that training if you haven't. Now, let's keep moving through these charts. TLT, 20-year bonds. They had been on a nice downward trajectory. Look at what's happened to the weekly chart. Now, it's a solid green. That means it's a slowdown in the go down, a slowdown in the down movement. But we got a long wick on the bottom, wick on the top. Still haven't hit the lows of the prior week. Look at that price percent oscillator that had been heading down. It's flattened out. And the derivative oscillator still gaining downward momentum, but up for the day 1.89%. As one would expect, if stocks start to crash, you would think that bonds should go up. And of course, it wasn't like we didn't have some warning here. We had the green open box candle over the prior 2 days, Tuesday and Wednesday of this week. We talked about that, the way that the price percent oscillator was flattening, derivative oscillator losing momentum. Well, it's not just flat now, it's moving up toward the red signal line, and the derivative oscillator's losing momentum. And we can see this first day of this latest 2-day candle pushing through the 2-day and the weekly trend line. That's very, very important. And of course, we have had 1, 2, 3, 4. We're going into the 5th day of up movement. We had that crossover on the 4-hour chart going up back on the afternoon of Tuesday. So this isn't new. Thursday was the big climb, though, busted through both things. So as far as our trade goes and where we originally started this thing and how profitable it was, we talked about when our 4-hour trend line was violated. We talked about the 4-hour chart rotating over, going up. And of course, now we've pierced the 2-day and the weekly. So you've got lots of alarm bells there. How are you using this information in your decision-making process? How are you recording it on your trade worksheet? What are you learning from this? Again, that's what practice trading is all about. You make your mistakes doing this. You take your profits at the right time doing this. You're using your profit and loss bands, I sure hope. All the trainings that we put out, of course, that we teach constantly and that we will be very much pushing during our Accelerated Market Mastery course that is coming up for the folks that we let into it. Now we go to gold. Let's look at gold. Down for the day, 0.72%. We see that the price percent oscillator is moving ever so carefully away from the red signal line. We have a green spinning top for the week now, indecision tending up. Price percent oscillator is headed down a little bit. Derivative oscillator still negative. This is the first down day we've seen this week on gold. Interesting. Remember, we look at the 2-day chart. It's been going down in gold for a while, at least the price percent oscillator was heading up. But as of today, the price percent oscillator is heading down. We do have a green candle that is forming first day of the latest. That's showing you some average pace movement. Derivative oscillator still negative. Gold has been very weak, very strong. That makes it weaken the down move. And we go to the 4-hour chart. We can see it was up in the morning and then lost energy in the afternoon. So we'll continue to watch and see how these big, strong down moves in stocks affect gold. Gold has been range bound, as we have talked about. And of course, you can, let's see, I want you to be able to see it more easily. You can probably see it easier in the 2-day chart. It's been range bound between about 164, about in there, yes, and down to 158. So it's sort of hit the top of that, and again, we'll continue to watch and see what gold does. But are these the birth pains of a new strong down move in the marketplace? Maybe. One day doesn't mean everything has changed. We will continue to watch and pay close attention to that. If that is the case, we will know, and we will be heading toward a weekly vertical crossover going down. It did that last time, remember? And we had tons of time to get into that and ride that down, or at least get out of the up trades or any positions that we had in our practice trades on the S&P, on the NASDAQ 100. So don't panic, pay attention, learn. That's what this is all about. Remember, you start getting scared and you make really, really dumb moves. That's why we talk about practicing. Now, that's it for our big charts. I'm going to cover Bitcoin, real estate, and oil here in just a minute. But for those of you who only care about those charts, we are done for the day. Thank you so much. Thanks for being with us. We're going to jump into these other charts next. Hey, sent out a bunch of books today. Thank you so much. Been talking to a lot of you who are interested in our Advanced Market Mastery course. I'm sorry, it's Accelerated Market Mastery course. It is an advanced course. If you are interested in being interviewed to take that course, I do all those interviews myself. I spent a lot of time yesterday doing that. I have more to do tomorrow. As soon as the course fills up, we're done. Can't tell you when I'm going to teach it again. But some people have asked, how much do I have to know to take this? It's less about how much you know. In fact, I don't expect anybody to step into the course necessarily knowing anything, because we're going to teach you everything that we teach in a very accelerated manner. My goal is to keep you from having to spend 5 to 10 years to learn how to chart the markets, how to practice trade options, set up your own virtual personal wealth fund. My goal is to help you learn how to do all that in a very intensive 3-month period, followed by 3 months of Q&A, so that you can set all this up and practice trade it and learn it and save you 5, 10 years, because there's a lot to learn, but it is fun and it's exciting. And there's everybody that I've had take it in the past has loved it. And I will continue to talk to folks and see who we think it's best for. There is an expense to it. It is not inexpensive. You do get discounts if you're a Patreon member or a book buyer, and we work hard to make it worth every single penny. If you can't afford it, we understand. There is no hard sell here or push. The people that are ready for it will take it. The folks that aren't will wait. Now, let's jump into Bitcoin. What's Bitcoin doing? Down 1.45%. We can see the stall in that red open box candle. Price percent oscillator slowing down. Derivative oscillator losing upward momentum. Go to the 2-day chart, getting closer and closer to crossing over, going down. We've seen it sort of coming. So again, we'll watch and see once that happens. If you were in any kind of up move in Bitcoin, you better be really, really careful if you're staying in it. Of course, what do we see as far as the rollover? We see that in the afternoon with that down move. First really bigger red candle we've seen in a while. Price percent oscillator spiking over, going down. Now let's leave Bitcoin and we will go to real estate. Down bigger, no, not bigger than oil, down 6.41% next to oil. What do we see happening? Well, we had that crossover back on the 29th. We had the week that peaked up. This week was trying, but look at that big wick on top. Like we said, derivative oscillator still oscillating upward, but that price percent oscillator's lost a good bit of its glory. We go to the 2-day chart. What do we see there? Check out the first day of the latest 2-day candle. Just hyping over, going down. Derivative oscillator losing momentum. Price percent oscillator still positive, but heading down. 4-hour chart. Remember we talked about it crossing over, going down back on the 10th? Well, it went down in the morning and the afternoon and then spiked down on the 11th, Thursday in the morning and afternoon, just hammering down. So real estate, of course, what have we talked about over all these weeks? How can real estate do anything but go down? But hey, when the getting's good, you jump in and you ride it, and then when it dies, you take your profits and you enjoy what you learned. What about oil? It's the big downer for the day, 7.41%. It's been trying to track along, moving up with some little bitty green candles. But look at that price percent oscillator. We set it still negative, derivative oscillator positive. We go to the 2-day chart, and again, we've seen it trying to move up. But again, the last 2-day candle was red. This latest candle, first day, down red candle. Oil, is just having a hard time. And of course, you can see in the morning down, further down in the afternoon. Remember, it didn't just rotate over going down. It rotated over back on Wednesday morning. We saw that price percent oscillator. Gave you a little preview what was going to happen along with the derivative oscillator. When they both rotate over at the same time, typically means something. So that's where we are, folks, as we end the day. Got a Friday coming. Is it going to be a Black Friday? Whoo! might be, we shall watch, we shall wait, we shall plan, and we shall be victorious. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.